Thinking about buying a fixer-upper and paying all cash? I get it. It sounds fast and easy, but what if I told you that paying cash might actually hurt your long-term wealth? With the brand new 2025 updates to the FHA 203K loan, you can now finance both the purchase and renovation of a home with a small down payment, and new rules just made this loan even more flexible. The FHA 203K loan is a government-backed program that lets you buy a home and finance the renovation cost with just one mortgage. So down payment is typically 3.5% of the combined purchase price and renovation cost. Loan amount is purchase price plus renovation cost minus down payment. FHA loans require both an upfront and annual mortgage insurance, which can be added to the loan amount. There are two types of FHA 203K loans. If you're looking for non-structural cosmetic upgrades like flooring, paint, appliances, you can get up to $75,000. It's called Limited 203K. For major or structural renovations like roofing, additions, or foundation work with a minimum cost of $5,000, it's called Standard 203K. In both cases, you only need 3.5% down if you qualify. And yes, it works for 2 to 4 unit properties if you live in one and rent out the rest. So what's new in 2025? FHA made some major changes. For limited 203K, renovation cap increased to $75,000. Timeline to finish work extended from 6 to 9 months. For standard 203K, still no hard repair cap, just loan limits. Completion timeline extended from 9 to 12 months. That means less pressure, more flexibility, and more realistic deadlines to finish quality work. When people find a fixer-upper, the first instinct is, it won't qualify for a loan, so I have to pay all cash. But that's exactly what 203K loans are designed for properties that wouldn't qualify for traditional financing because of their condition. Now, let's say you find a $400,000 fixer-upper. Instead of tying up $400,000 in cash, you can put 3.5% down, finance the rehab, and keep your capital for future deals, emergencies, or even investments earning returns elsewhere. Now let's talk about cash versus 203K scenario comparison. Scenario 1, all cash. Purchase, $400,000. Rehab, $100,000. So total out of pocket, $500,000. After repair value, $600,000. Equity, $100,000. Return on investment, 20%. Now let's talk about scenario 2 using a FHA 203K. Purchase, $400,000. Rehab, $100,000. Total loan, $500,000. Down payment, $17,500. That's 3.5%. Out of pocket with some closing costs, $25,000. Equity, $100,000. Return on investment is 400% and above. Result, you're using leverage, letting your money stretch further and work harder. Financing doesn't mean you're broke. It means you're strategic. Your cash should be used to build assets, not get trapped in one property. With an FHA 203K loan, you can control multiple properties, build equity with the bank's help, deduct mortgage interest, and still keep reserves for future deals. The FHA 203K loan just got a major facelift, and it's one of the best tools out there for real estate investors, house huckers, or anyone trying to buy low and build value. So don't tie up hundreds of thousands in a single property. Leverage FHA, build equity, and invest smarter in 2025. So want to see if you qualify? DM me 203K in the comments below. I'd love to help you run numbers or show you what's possible in your local market.